STR stands for Suspicious Transaction Report. SAR stands for Suspicious Activity Report. In the legislation, that's the Proceeds of Crime Act, it's outlined there in terms of STR and SAR. The bank is the one, or the compliance department, based on our legislation, is the person or the entity that will make the determination which transaction or activity is suspicious or not. Having established a relationship with the bank would inquire from the customer to provide certain information before the establishment of the account. That is what is known as KYC or CDD, more acronyms again. KYC is Know Your Customer, and CDD is Customer Due Diligence. Someone establishing an account at a financial institution, the bank is required to know their customer and conduct customer due diligence. Part of it would be to ask you certain questions as to your occupation, how much you're making, ask for your job statement to verify that you're actually making this. If it's a business, ask for audited financial or managerial accounts and so on. Ask if you are what is called a PEP, a politically exposed person. Ask how much money you are planning to deposit into the account. So they basically are building a profile for the customer. So when the bank flag that suspicious transaction, so they determine that transaction or that activity is suspicious. Having done their initial investigation or analysis at the bank, look at the history and so on, they are required again under the legislation, the Proceeds of Crime Act, to report as that suspicious transaction or activity to the FIU. All banks in Trinidad have what you call correspondent banks away. And just as how the customer has to verify the information that they're providing and the deposits and all these sort of things, the banks in Trinidad have to do something similar to the correspondent banks, because the correspondent banks are being supervised by. So they want to make sure that money is coming in from Trinidad is not tainted in any way in terms of money laundering and so on.